It is without doubt that some of the wealthiest people in America, actually in the world, are its farmers. Certainly growing up in England, where the landed gentry were those who ruled the country for centuries, I've always held a fascination for the mystique of land in its rawest form, the farm. Adam Gower here, host of the Gower Crowd podcast, and my guest today is Carter Malloy, who is founder and CEO of AcreTrader, a real estate crowdfunding platform that owns farms and sells shares in them to investors like you and me. What a concept! Just think of the one thing that has absolutely not let us down during all this total chaos during COVID. But ponder for a moment, even the last downturn also, during the global financial crisis. What was the one thing that you could rely upon the most? 100% the food supply. Despite panic buying at the beginning of the COVID crisis, right? You remember, it's not that long ago, there's been absolutely no impact on the abundance of food at the grocery stores. It has been a non-event. But how the heck does that happen? Well, simply stated, it's because we have one of the most robust food chain systems in the world, in history. And sitting right at the very foundation of that is what? The farm. So serving that market, Carter Malloy has built one of the most sophisticated websites and marketing systems in the crowdfunding space, has a high-powered board of directors. Go to his website to see exactly what I mean about that. Blow your socks off. And has recently raised $5 million in venture capital to build out the platform. Impressive stuff. They are doing crowdfunding the right way, and if you'd like to know how to do that too and want to raise money online, check out the whiteboard workshop on the podcast page for today's episode, where you'll learn exactly how to build a marketing machine just like AcreTrader. Plus, we're also still running a promotion on the entire master course, Investor Acquisition Master Course, so keep an eye out for banners for that too there at gowercrowd.com. So now find out how a crowdfunding platform has excelled in the field of digital marketing to help everybody become a member of the landed gentry by buying a piece of a farm. My guest today, Carter Malloy, founder and CEO at AcreTrader. Carter Malloy, CEO and founder of AcreTrader. What a pleasure it is to have you on the show. And like I told you in our pre-podcast chit-chat, what I would like to hear from you out of the gate is your elevator pitch for any new prospect that you might come across who you know is an investor in real estate, an accredited investor, you know they invest. Why should they invest in agriculture?
Great question. One we talk about all day, every day. That's right. Agriculture or farmland is real estate. So we are real estate investors. We do it through our website at acretrader.com, and it's a very simple investing platform. You named it for accredited investors currently. And we allow you to invest in farmland. Why would you want to invest in farmland is the next question we get. That sounds incredibly boring, and it is. And that's great. You know, boring assets can often be very good ones. And farmland is certainly one of those, where over the last 30 years or so, it's compounded almost a 12% IRR for its investors. It's done that without leverage, so without debt and without the volatility you see, the big positive and negative swings you see in commercial real estate returns, for example. Farmland has not experienced those. So it's a slow and steady compounder, and that's what we're after, is investing for portfolio diversification and risk-adjusted returns. And that's why we're excited about farmland.
Fine. So you've said a couple of things here, and just so you know, I do just make sure you know I'm typing here. I'm not sending emails or texts or anything. I'm just taking notes, basically, what we're talking about. So you said two things there, very, very important. Number one, without debt. That's a big wow, because as we all know, debt is the killer, right? It's the killer. It doesn't matter what happens. If there's a downturn and you've got debt, there's a potential you could lose your asset to somebody else higher up or lower down in the capital stack, right? Higher in the priorities. But there has to be a downside to farmland and to investing in farmland. So tell me, what are the downsides, right? I want to know, what are the downsides?
Yeah, there's downsides to everything, and there's no risk-free returns certainly out there. But as a whole, the downsides for us really there's macro and there's micro, right? So when we think about macro risks to investing in farmland, commodity cycles can be tough. We've been in one for 5 years now of low commodity prices. That doesn't help us as farmland investors, and we've seen that with farmland values. We're not talking about returns because you also get a rent from the farmer, but the values themselves have slowed down in their appreciation over the last 5 years as commodity prices have slowed. Interest rates are impactful as well, and productivity. So does that land grow more and more food every year? Can technology continue to help expand the value of that land? And the good news is both interest rates and productivity have continued to be macro drivers while commodity prices have not. Then there's micro drivers, and that's where the real risks lie. And that's where we really spend our time and thinking is diligence, making sure you underwrite the right farms and not the wrong ones. Farmland is an incredibly idiosyncratic asset class in that one parcel right next to a great one may be total garbage. And so we've got a world-class team of farmland underwriters and a farm valuation team that goes out and looks for farmland. We talk to farmers and farm sellers every single day, and a lot of those to boot. And that's the biggest, I would say, focal point of our company is due diligence, is going out and really, really aggressively underwriting every parcel that we bring to the website. And to that, we maybe list 1 in 100 farms we look at. And that's a big maybe. It's something much less than that in reality.
All right, so let me ask you actually, and I do want to talk to you about marketing, because I had a look at your website. You've got a very sophisticated website, right? So yeah, it's definitely out there. In fact, I think you've got breadcrumbs as well on your website, don't you? Isn't that? Did I notice that? I just discovered them. Actually, I've read about them, but we're just building them on my website, so I know that's extremely advanced stuff. So let's talk about your marketing and how you set about that in a minute. But first, I do want to understand more about your business, because it's quite intriguing to me as a real estate guy who's never contemplated actually investing in farmland before. So tell me, first of all, what are you doing actually on AcreTrader? Are you the principal that is buying farms and buying farmland and then leasing it, or are you making loans to farmers? Just like, what's the financial model? What's going on from, beginning to from seed to table, however you want to characterize it?
That's a good question to zoom out and discuss first. It's very simple. We take a parcel of land, we place that land in a unique LLC that would then hold the title of the land, and we allow investors to come buy $10,000, $20,000, $100,000 worth of that LLC. And then we take care of distributions and everything else back to that investor, so they don't have to think about all of the headaches that come along with owning farmland. And when you mentioned, I haven't contemplated investing in farmland before, most people haven't. What's fascinating is it is a $3 trillion asset just here in the US. It's something like $9 trillion globally, but it has not been something that's highly institutionalized for a very long time. Until the last 10 years, we've seen private equity really rushing in, and private equity in the space in the U.S. has grown from $3 billion to about $30 billion of investment. So still really small in the grand scheme of things. But the asset is becoming more and more professionalized as more people wake up and look at the return figures and go, wait, hold on, raw dirt, this really boring asset has compounded at what level and with what volatility and with no correlation to most other major asset classes.
But the challenge, and by the way, you went silent for a moment through that entire fantastic explanation. So I'm hoping that Zoom picked it up in the background so I can listen to it later. It's a slight disadvantage that I didn't hear it. But what is the underwriting process for determining whether or not this piece of land versus this one is one that is viable?
So we do both a top-down and bottom-up analysis of every piece of land we see. So that includes, what does the area look like? What do the local comps look like? We've got a extremely large and proprietary data set of comparable sales for farmland. Beyond that comparison, sort of top-down approach of, is this a good local deal? Then we do bottom up, and that's really the majority of the work. So underwriting the soil, for us, every farm boils down to three things: soil, water, and financial profile. So the first two are very straightforward. Soil is a good quality soil. Can we be crop agnostic and grow other things in the soil? The second one is water. Is there good permanent access to water? We don't want to think about water going away. And there are a lot of places where that's a problem. And you can see what look like great deals on the surface. In reality, there are great deals, and in 10 years when there's no water, that becomes a desert, and we don't want that. Then financial profile is a catch-all term for the things that really impact the value of that farm. So valuation, cap rate, rents, what does the tenant look like, et cetera. So it's a long checklist we go through. It's a very formalized process we have with both software and people.
So the reason that I asked that is that, and let's start moving into the marketing side of it. The reason that I asked that is that, as you know, probably one of the most popular asset classes amongst accredited investors, they start to invest online through crowdfunding, is apartments. And the reason for that is that everybody has lived somewhere, right? I mean, you live somewhere, you have to pay rent, you have to pay bills. It's an intuitive financial model because we all live it one way or another. Mm-hmm. Even if we own a home, we understand a mortgage and paying the utilities and etc. But when it comes to agriculture, to farmland, we go to the grocery store, right? So there's a real disconnect between the economics of investing in farmland and what we actually understand, right? So what we understand because we live it. So how do you, in your marketing and the way that you go out to find accredited investors, what are the biggest challenges that you find to bridging that gap between what is understood and just explaining what it is that you do?
Totally. So I'll discuss those two barriers very quickly, and then I want to circle back to farmland versus apartments. It's a really fantastic and interesting comparison. So our biggest barriers for investors coming to our platform and actually creating an investment are two things: education and trust. Number one, they want to know more about the asset class. So we have tons of materials, as you've seen on our website. We consistently update, put more and more information on there, and new blog posts and new financial data to enhance that educational process for investors to understand farmland, real estate, how this farmland works, how our company works. And two is trust. We also have to show people that we're a real company. We're dealing with people's money. This is a big deal, right? And our margin for error in that is zero. We're a startup, but you cannot move fast and break things when you're dealing with people's money. And so it takes some time for people to get to know us, realize, hey, we're real humans. We all have, professional investing backgrounds and farmland backgrounds. And this is what we do all day, every day. And it takes people a while to come in and get to know us and call us and speak to us. Often it does before they make an investment. We're seeing those timelines shorten pretty dramatically as people are looking more and more for alternative assets, and we have something very unique to offer. So we're approaching both those barriers aggressively to show people the solutions to those two questions.
Okay, so how do you grab somebody's attention, right? And I mean this in terms of the way that we communicate now. Crowdfunding, it's really, it's real estate has been crowdfunded forever. The difference is today, as you know, you can actually approach people who you don't know. And so presumably the way you do that is on social media, etc. I don't know what else you do, but I'm interested in knowing. But how do you grab somebody's attention for this, and forgive me for saying this, somewhat obscure option, right? This alternative investment. What have you found works the best?
The truth is the big one, right? Like we are not exaggerative or hyperbolic in any of our messaging. We're fact based, and I think when we show people the facts, hey, here's the performance history of this asset class. Hey, here's how it works, and we're factual in our marketing. That helps a lot. You may get people's attention with a flashy message, but or a promise or a guarantee, but you also can get a lot of trouble. And it's something that, as a side note, we just shouldn't, there's no room for that. There's no reason to act like that.
Okay, so, but that's very important. But what you've said is very important. You've said that the first thing is you talk about facts, and the first thing you talk about is performance history. Right? So when you talk about performance history as being a factual part of investing in farmland, you're also talking to what I call the WIFM response, right? The what's in it for me. That's what your approach. You're not talking about anything technical, really. The first point of contact, and actually it's phrasing this as a question. The first point of contact is to approach an investor with the what's in it for me data, right? The statistics, and that's your first point. Is how much you're going to make, right, when you invest in farmland, and that's what brings them into your orbit. And then what do you do?
And I want to pause there. We don't say, hey, here's how much you're getting. The past is no guarantee of the future. People are very clear of that. We still yell it from the mountaintop that this is past information. The future is unknown. But what to boil down the message very simply, what we often point to is there's two ways to make money in farmland. You can make money from the farmer paying you rent, because we're not farmers. We have to tell people that quite often. It's still difficult to understand. We're not out driving tractors and picking lettuce and driving and harvesting corn off the fields. The tenants do that. So we simply own the land. So you make money two ways, or you can make money two ways. One is the farmer paying you rent, and two is appreciation in the asset class. And both these are very easy to understand. Farmer pays you rent because they want to use the land, and farmers all want to grow their business. Many of them do because of economies of scale. So the vacancy rates and default rates in farmland are shocking. Yeah, they're just incredibly low, both of them. And then land appreciation is also very easy to wrap your head around because we only have so much. You can build new apartments every day. We have this much farmland in the world, and the amount of farmland in the United States, for example, is shrinking every day. The stats are something like 3 acres per minute of farmland we lose. But we have more people to feed every day. Everyone has to eat. And so messaging really tends to resonate people. Boil it down first, explain that, hey, this is dead simple, and then two, show them information and show them how it works.
And how do you decide what exactly it is that you're going to be writing blogs about? You talked about putting out blogs all the time. So what is it that, how do you decide what those topics are going to be?
Most often it's based on questions we get. So we keep a list of all the questions we're asked and the number of times we're asked those questions from around points of confusion or points people want to be more educated on. We then use that to inform our content strategy. We have a calendar of, hey, here are all the things we're getting questions on and what we want to write about. And then there's additional, economic information and update information that's just we want to make sure people are equipped with when they're looking at the asset.
And then once you identify questions and topics that that you are frequently asked, what is your process for creating content around that? And then how do you get that out?
We write it, we double check it, and then we publish it. Don't mean to be coy or overly simplistic. Based on the expertise necessary for that article, the content will be assigned to somebody internally. So, hey, this is we want to write a piece about the potential commodity impact on farmland prices. Well, Ben Maddox on our team works on farmland valuation every day and thinks a lot about commodity prices, so he's a natural fit for that. He writes the content. 2 or 3 of us, then we run it through a formal checking process to check it for accuracy, grammar, and anything that's even legally gray area, we just don't include it. So we are after that, then goes to our technology team who posts it on the website.
And do you do any SEO optimization? Do you look at how to structure an article in any way?
We do.
How do you do that? You do that internally?
I'm not an SEO expert, but we do have 2 people on staff that are highly familiar with SEO and that help to just to optimize our use of words in that. And an example of that is I'll write an article and I'll have a tendency to say the phrase farmland investing 11 times in an article. And the SEO guys and girls go, hey, maybe it's boring anyway. Don't use that same phrase over and over and over. Use some other phrases so that Google knows what you're talking about. And that's an example of SEO for us.
I see. Okay, yeah. So I did have a look at some of your articles, and I see they're structured quite nicely. I just look at the H1 and H2, getting technical, the H1 and the H2 headings, and I was wondering if you started with that and then formulated an article around that kind of structure, or if you did it some other way.
No, we want to write good content, right? And while we want to have structure for the search engines to be able to read it, we want the content to be good. I think a lot of companies and websites get lost in pure SEO optimization, and let's just do, to the nth degree what we think Google wants to see. We write what we think people want to see.
And yes, hang on, I have to jump in. I've got to interrupt you there because actually. We'll move on from this point though, but analyzing what Google wants to see is de facto what people want to see, isn't it? Because Google's algorithm is saying this is what people are asking about this particular topic. So what we do is we create outlines that are very specifically calculated or formalized, optimized, based on the questions that people are asking, and then we put that content down rather than imagining that we know what people are asking en masse. That's the difference.
Well said.
Once you publish an article on your website, how do you now distribute that? How do you get that out in front of prospects?
We have thousands, actually, we have a lot of website users that have logged on and created accounts, and we'll share it with them over email, and then we share the content over social as well. So we schedule out all of our sharing for LinkedIn, Twitter, Facebook, etc.
Which platforms, Carter, do you find are the most effective for what you're doing?
Facebook's got the numbers. I don't know that they have the intent. And it's always a tricky game. We distribute and advertise across a number of channels, and again, we have data scientists on staff. We are extremely data oriented as a company, but we have to be cautious not to purely let the data lead us. Let me rephrase that. We have to be cautious to make sure to consider that there are humans involved at the end of the day, and there are plenty of things we could do to extremely optimize, making sure people get invested. But we don't want people to invest if they don't want to invest, right? And so we're a little cautious on relying on one particular platform or one particular message to get users. And instead, it comes back to just be forward, be transparent, and let them figure it out on their own. If you provide people the information and provide them the guides and the tools, they can figure it out, and we don't have to force them. And that's
where do you guys? No one's going to strong arm somebody to got to invest now, right? Where do you guys advertise? What do you like? Which platforms do you like to advertise on?
You name it, we're there. We try a lot. We've got a pretty incredible marketing staff here that helps with advertising. So it's all those algorithms are way above my head. Yeah.
Do you guys advertise on LinkedIn?
We do.
Really? And do you have any sense of how that compares with Facebook, for example?
It's very expensive. LinkedIn is very, very expensive to advertise on. They're really proud of their product, but it is also a very professional platform. And so it's what comes back to the data, for example. The data would suggest that a new account creation on LinkedIn cost us more money than Facebook or Twitter. That's true. But it is a more professional platform. People want to engage with content there. And, we can see, all right, it's, here's how many clicks we got from each one, but who really acted, who really cared, who called into us, who read through the information in the blog post. And that's what matters more is engagement.
Well, exactly. I mean, this is the challenge, right? It's easy to get clicks, but conversions in our business is somebody actually writing a check, right? An investment check. So if it costs more to get somebody on LinkedIn, but a higher percentage of those people actually convert at the end of the day, then your cost per conversion is lower, or potentially can be lower.
That's right.
Right. And so to what extent do you guys conduct, like, tell me more about your data analytics and what really drives the engine behind the scenes at AcreTrader.
Yeah, it's heavy. I mean, we work extensively on data analytics. We've got incredible platforms, incredible people solving problems every day. But again, something that I'm personally very cautious of is this concept of pure optimization of the business, not even for clicks, for conversion, if you will. What matters to me is optimizing for engagement, because I would much rather have an informed user invest in our platform and then come back and invest again later than squeezing somebody through a hyper optimized funnel that's purely built for conversion just to get $1 out of their pocket. I think if we want to build a long-term sustainable business, which we do, we have to be focused on quality of interaction and quality of engagement and quality of investment ultimately, as opposed to just purely pulling. We don't want somebody to invest unless they've come to that decision on their own.
It's interesting that you have that perspective. Actually, I'm not sure I have ever thought that an investor somehow isn't highly motivated to invest when they actually invest, and that part of the process, the only way to convert a prospect into being an investor is through education. They're not going to do it kind of randomly, right? I mean, these are big dollars. In fact, what's your minimum investment, Carter, on your platform?
We're usually around 10 or 20,000. And sorry, I touched on earlier when we went blank. To recap that moment real quickly, we take a parcel of land, we put it in an LLC. You buy a piece of that LLC. Those minimums are typically $10,000 or $20,000. You can do it in under 5 minutes on our platform.
And you do have but there is a minimum.
There is a minimum. That's correct.
Yeah, and then you're only accredited investors. And what is the scale? What is the scale of your platform at the moment? What are the typical sizes of deals that people invest in, or that you invest in?
Right now, we're anchored around $1 to $2 million deals is typically what we look for. Sometimes it's smaller than that. Sometimes it's bigger than that. But those tends to be transactions that we fill very quickly. And so the funding velocity is there. It makes the seller happy, makes the investors happy. And so that's the focal point today, I'll say.
And why is there no debt? Is that because banks don't lend, or is that a decision, a risk mitigation decision that you've taken on board?
The latter. The debt's all. I mean, banks will lend to anything. Sorry to my friends in banking, but there is debt available, and we do sometimes use debt. So I don't want to just wholesale cast out debt as a terrible thing. Leverage is the driver of our economy, and it's important in investing as well. What we are cautious about is high LTVs. So as an example, in farmland, you'll typically see maximum LTV, loan to value. So the amount of the loan relative to the total value of the deal at 50 or 60% as a maximum. You think about that versus commercial real estate, where you may be up to 80 or put some mezz debt on top, go above that. It's really dangerous because that means that you have a 20% correction in price. You as the equity investor have lost all your principal. That sucks, and that's not really what investing is all about. Investing is supposed to be is a big asterisk there. It's supposed to be about compounding of capital and wealth preservation, as opposed to speculation. And that's really what we're focused on.
And can I think of a farmer as, when you talk about the farmer tenant, can I think of the farmer in the same way as I think of a residential tenant in an apartment building or an office tenant, etc.? They sign a lease, and if they default, you can evict them and bring in another tenant, and it says it functions the same way.
It functions the same. Well, it looks the same. It acts very different, maybe is the way I'll put it. So rent checks are typically once or twice a year. Quite often, those are before the farmer even plants a crop. So it's kind of hard to have a default when they pay you before they actually move in, if you will. And so if a farmer decides not to pay rent, you can go find another one pretty easily. If you've underwritten the farm well and the tenant pool in that local area, which is something we focus on quite a bit. And unlike apartments and commercial real estate, our tenants don't punch holes in walls. They don't break toilets because we don't have those things, right? We have dirt, and there's small things that they need to do, like making sure the ditches are kept clean, and we monitor for that. But as a whole, it's again, it's dirt, and it's as simple as it gets.
You can over farmland though, can't you? You have to leave it go fallow every once in a while, or plant some kind of regenerating crop. I'm just going back to my high school geography, so I've got no idea, but I do remember some of these things.
As a general statement, that's right. There's a word for it called mining nutrients, which you can have a farm. And again, these are things you can monitor on the farm to make sure they aren't occurring. And it's an important part of why you want to underwrite the tenant well. The risk of those things is still appears to be, the data is really squishy, but appears to be like incredibly lower than tenant risk in a commercial or multifam type of investment.
The risk of a tenant defaulting, you mean on the lease? Oh goodness, Carter, you've totally frozen again. I do hope Zoom is picking this up.
Hey, Adam, I apologize. I lost you there. I said multifamily investment, and then I lost video again for some reason. Sorry about that.
Yeah, it froze again. And
We're back.
Yes, we are back. Good. And I was asking, actually, I was looking at another question that I had here. Stay moving, because it looks like you've frozen again at last. What on earth is that? No, you've frozen out again. I'm so sorry. There you go. There you go.
Yeah, you were asking. I'm sorry about this, Adam. I'm not sure what's going on.
I don't know either. I think there's just too many bloody people using Zoom, actually.
That's right.
That's probably what it is.
That's right.
Actually, so let's just jump back, because I can't actually, I was concerned and I was looking at another question. So let me ask you another question, actually, as we start to wrap up. So as we're looking at it, and by the way, this is absolutely fascinating to me, what you're doing. I'm really, really intrigued. And you are, without doubt, you have one of the most sophisticated websites of anybody in commercial real estate. Seriously, and this is my business, and it's really quite incredible how good your platform is relative to others who are in more traditional, again, forgive me, more traditional corners, more well-recognized and well-known corners of commercial real estate. So let me ask you one more question about that, and then I want to talk to you about the impact of what's going on with this wacky world that we're in right now. To what extent do you use multimedia, meaning specifically video, to educate people and to distribute online and to use on your website?
Not enough is the real answer. People engage in video quite well, and we have some explainer videos, and we've got videos out on the farm and things like that. But it's a focal point of content for us in the coming year, is to do more video, and we've been doing more webinars recently with really great engagement, and tons of questions on them, and so investors and people in general like engaging with video, and so we'll certainly do more of that going forward.
And it seems like it's an extremely photogenic business that you're in, especially if I mean, as I sit here now, I think about where I am, of drone photographs or video, for example, above a farm, with just how gorgeous the whole area is, how beautiful the area is. It just strikes me as, if you add a layer of finance to that, right? Here's this beautiful part of the country, and this is how you can make money in that. Just strikes me as being a kind of wow opportunity. Is that something you've thought about?
It is. We've used drone videos in the past, and we'll use them for analysis as well when we're actually underwriting a farm. So we like all that stuff. I think you're right. Pictures matter, and we don't put enough focus on it. We're numbers and technology nerds, right? So we really put too much focus. Not too much. There's not enough. There's no such thing as too much focus, but we heavily emphasize diligence and underwriting and finance. And we could do a better job, without a doubt, of just having better pictures. I mean, you take a picture in the winter of a farm, and it's literally dirt. It's so boring. But it's amazing in the summer. The whole thing's full of food. It's actually growing food. But you're
all right. So let's talk about it. It's just absolutely fascinating. I think it's amazing. I live in this semi-arid area in Central California, and what's wacky to me about this place that I live is that during the summer, it's the exact opposite of where I grew up. It's in northern England. During the summer, everything goes brown. During the winter, everything goes green. It's like,
Right.
what's happening? It's the strangest thing. But it's very photogenic and it's very, very beautiful. And understanding as I drive along these roads, these valleys with farmland on both sides, to be able to see in my mind's eye what the economics are of each of those farms that I drive past on both sides of the road would actually be, I kind of think of it as being looking through those Google glasses that they gave up with, right? Where you can kind of see, the economics as you go along. Be very interesting to do that.
Yeah. Those people, right? Those are businesses, right? They're not just growing food because it's pretty, because it's fun. Those are all businesses, and each of those trees has little dollar bills hanging off of them. And I can assure you that whoever's working there, they're thinking about the business of it.
Yeah, that's what's so fascinating. All right, let me move to one final question before 3 sign-off questions. Quick sign-off questions. All right. So what is one of the most important asset classes in real estate at the moment is, to me anyway, as I look at the world during these crazy times of coronavirus, is the food chain. And understanding the impact of social distancing and all this kind of stuff. So what is the impact of what's happening at the moment on your investments specifically? Tell me about that.
For our investments, we've seen no discernible impact. The farmers are out in the fields planting right now. So at the end of the day, they know what's apparent to all of us, which is, doesn't matter what happens with the coronavirus, we're going to eat. We will continue eating. I promise. That's one thing that we can guarantee, is that humans eat food. And so the farmers are still busy. We're not really seeing any discernible trends in land values yet. We do think that there will be some knock-on effects in some areas, without a doubt.
And what would be the cause of that, Carter?
So some crops, export values are damaged. And so across the commodities, the entire commodities realm, we're seeing very real pressure on price. And that pressure affects the farmer. And if the farmer is your tenant and they're now in their 5th bad year, that's no good. The good news is, in the U.S., is we do have very firm government support of our farmers. Again, the government also knows we need to eat. And so don't let the farmers have too much pain or go out of business. And so there are some great long-term structural support programs for things like helping with insurance, but also some near-term support things around, A, the trade wars, which hurt commodity prices, and now B, coronavirus, which is hurting commodity prices.
So when you invest $2 million in a piece of dirt that you're going to lease to a farmer, is that, again, please forgive my total ignorance of this area, but that's the kind of strikes me as being very much more local, that a farmer, a $2 million piece of land with a farm on it is going to be serving the local community, not exporting to another country. Is that just completely wrong, basically?
It's not completely wrong, but it's pretty wrong.
So I used to work for a guy who would say, I am seldom in doubt, but often wrong.
Yeah, we food for the most, there are very small farms, right? You think about a 5-acre farm that's growing vegetables for the farmer's market. Those are great. We love those, and they're growing in numbers and locations, and that is awesome to see that return to local food supply. But as a whole, that's why your statement's not totally wrong. But as a whole, we do, in general, collect the commodities and then distribute them back out. So if you're growing corn or soybeans, there are central distribution points where you put those in grain storage and you put them on a barge, and then put them in grain storage and maybe put them on a barge to ship internationally. Maybe you sell them to Kellogg or somebody, that General Mills, or somebody that's buying that grain.
Got it. Okay, now I understand. Yeah. All right, that's interesting.
Cows eat a lot of grains. Cows and pigs eat a lot of soybeans and corn and things like that.
I'm going to give you a quick anecdote, a story that happened to me many years ago, and then I'm going to ask you 3 sign-off questions. But many years ago, I allied with a fellow called Den Fujita, who was Mr. McDonald's in Japan. He was the only person that Ray Kroc had ever given an entire country license to. And he flew out here And we went and we met with fresh, gosh, what was it called? I want to say Fresh Farms or something. And Ray Crocker decided never to expand his business horizontally or vertically. I'm not sure which way. All he did was serve burgers and fries, basically. Mm-hmm. But the people that farmed for him, they also grew with McDonald's, and I'm not sure why you've mentioned that, but it's because they supplied him. They were part of that food chain, and Fresh Start Bakeries. That's who it was, Fresh Start, and they were the biggest baker at the time west of the Mississippi, and all they produced was buns for McDonald's, the 3 or 4 different types of buns. It was unbelievable. I went into their warehouse or into their manufacturing one time. Carter, it was unbelievable. They had silos that they poured in, and the whole thing, acres and acres, was just machines that created these buns. And there were like 5 people there running this whole 144,000 gross of these things coming out, and all they did was oil the machines. That's I could tell. Right. But they relied on countless farmers to supply them with the produce.
Absolutely. So that's still the case today. There's a company, Middleby, that owns a lot of the production, manufacturing specifically for McDonald's buns. And supply chain is something. Today aside as a whole, that's a constant focus throughout the agricultural value chain and food ecosystem.
3 sign-off questions, just quick sign-off questions. What's for somebody who is, we'll have to take you away from agriculture if you don't mind, but just think about marketing online and crowdfunding. And I noticed you just put up some articles very recently specifically about crowdfunding. So it's obviously on your mind a little bit right now. So for somebody who is thinking about crowdfunding or syndicating real estate online and hasn't done that yet, what's the most important thing they should keep in mind?
Do your research. And I cannot yell that loudly enough. We see a lot of bad deals out there, on other crowdfunding sites, in all across the world. There's just, there are some good deals, some great ones and some not great ones. And not only should you as an investor underwrite the company that you're investing with, whatever platform that is, make sure, are they going to be around in 5 years? Are they trustworthy, or are they pressuring you for a sale? So first, underwrite the company and make sure these are good people that you can trust with your capital. And then 2 is underwrite the deal and ask questions and dig into those numbers they give you, dig into the documents, talk to a financial professional, talk to a lawyer, but do the work and just make sure you're investing in something that you believe in, and you're not don't invest because of the IRR numbers they promise you or that they show you. Don't invest because you like the pictures or you think that the metro area that is in, or for us, the agricultural area or the commodity is a good one. Invest because you did the work and because you feel good about that particular investment.
Yeah, fascinating. That is the words from the wise to the wise. I think it's a very, very good advice. Second question, online. Carter, what has been the hardest lesson you've learned?
Oh boy, how long do we have?
That bad? Oh yeah, give me a couple of examples is good. Yeah.
I think you shouldn't do business with everyone that you meet, even if they want to do business with you, and that's. I'll just leave it at that. I think that's when you're working online with a platform online, you meet a lot of strangers. And even if that stranger is somebody that wants to be a customer, if they don't seem like a good person or they seem like they're going to be a problem down the line, it's not worth it.
Yeah, that's interesting. Resisting temptation, basically, right?
Yeah, and it goes both ways. I mean, we have to do the same. I'll give you an example on our platform. We've now had 2 periods where we did not have a farm on there, and that's a big lesson for us. People get frustrated with us. Today, we just filled out another farm recently, and so today we don't have a farm live for sale on the platform. We went 3 weeks in December where we did the same thing. It's frustrating for us. It's frustrating for our users, but we take the position of And December is a great example. During those 3 weeks, we could have listed 10 farms. We didn't like them, or they didn't quite fit the bill, or we weren't through with diligence. And I think that we too, as a platform, have to be willing to forgo revenue or forgo growth if it makes sense for our investors. And that's what we really think about every day: is what can we do today to make this a good experience for our investors?
Final question. What are your personal daily habits that keep you successful, again, in the online world?
Particularly online is checklists. I know it sounds ridiculous, but every morning I get up early as you do. Get up early, take a quick shower, and get into my office, and immediately build the list for the day. Here's all the things I want to get done today, and then here's the one thing. It's an older philosophy, but find that one thing that you need to accomplish today and do that right now before lunch. And it's big and it's cumbersome and it's something that's going to be a pain in your rear. But the one thing, get it fixed today, or get it fixed right now, and then you can go down the checklist and finish everything else. But if you want to progress, you have to be productive. And I think those are a couple of the things that we use, not just me personally, but we use as a company. We adhere to those philosophies to just keep the bus moving forward.
Carter, what a pleasure talking to you. It's such an interesting asset class that you're in. I really am thirsting to learn more. And I know you've got a great website with a lot of information there. So I'll definitely dive in. Carter Malloy, AcreTrader, thank you for being on my podcast.
Thanks for having me, Adam. It's been a pleasure, and appreciate the questions and the conversation.
That was Carter Malloy, founder and CEO at AcreTrader, the food chain. It's fascinating. I've been reading all about it on the AcreTrader site, and I find that I just want to know more and more about it. It's really interesting. Find out for yourself by going to the podcast page for today's episode at gowcrowd.com, where you'll find links to Carter and to AcreTrader, and also where you can gain access to the discounted investor acquisition system, master courses, and links to the whiteboard workshop, where I show you how to build one of these incredibly powerful investor acquisition systems yourself. All there at gowercrowd.com. All right, that's it. Thanks for listening. And thank you, Carter Malloy, founder and CEO at AcreTrader, for your time with me today. And thank you also for the follow-up call that we had early AM. Really appreciate it. You have a fabulous, fascinating story to tell. That's all for this episode. I'll see you next time. And in the meantime, stay well. And for now, this is Dr. Adam Gower signing off.